Hi everyone. Today we are going to understand how indecisive candlestick signals can be crucial for a trader or an investor in taking important decisions. For starters, indecisive candlesticks are those candlesticks which indicate neither buyers or sellers are in complete control and markets are in a state of limbo. Although such candlestick signals are important both after a downtrend in price as well as an uptrend in price, as per historical evidence, they tend to assume more significance when one sees them after an uptrend. Simple reason for this is bulls don't like indecision. Thus, an occurrence of such an indecisive candle after a steady uptrend in price is a forewarning for a trader that the trend in the stock is likely to reverse. How strong the reversal can be depends on what time frame we look at these candles on. For example, if we look at such candlesticks on daily time frame, the implication of these could be for a few days. If we look at such a candle on a weekly time frame, the implication could be for a few weeks, and on a monthly time frame, it could be for a few months. Higher the time frame, stronger is the signal. Indecisive candlestick signals come in different forms in the world of candlestick patterns. Some of the most popular indecisive candlesticks include doji, gravestone doji, dragonfly doji, spinning tops, hanging man, etc. Each pattern is a lesson in itself, but the most common thing in any indecisive candlesticks is a very small real body and long wicks on either side. In some patterns such as doji, the body is almost negligible. Now that we have understood the mechanics of an indecisive candle, let us look at a stock which is showing signs of bearishness with a series of such candles on weekly and monthly time frames. The name of the stock is Indigo. Let's look at the weekly chart of Indigo. As you can see, the stock has moved up from 928 odd levels to 1800 in the last 1 year and is now trading at a very strong resistance of 1850 to 1900 as marked by these two horizontal lines. Weekly chart of Indigo gave an early warning of a trend reversal with a spinning top candle on 4th of June, followed by another spinning top candle on 11th of June, and followed by another one on 16th of July. 3 indecisive candles in a very short span. Series of such candles on the weekly time frames indicated that the stock lacks enough buying interest at these levels and traders are more likely to sell every rally in price. Now when you look at the monthly chart, you can observe that at the same resistance of 1850 to 1900, Indigo has formed not one but 2 spinning top, again these indecisive candles back to back. These candles with their small real bodies and long wick on the upside are suggesting that it would be difficult for Indigo to cross this resistance at least in the next few months. Thus, positional traders with a view of 1 to 3 months can consider exiting this stock if they are holding, or one can also look to plan fresh short positions with a stop above 1900. Active investors too can consider booking profits in the stock if they are currently holding and maybe re-enter again at lower levels. This is how a simple understanding of indecisive candlestick like spinning tops and doji along with support and resistance levels can help a trader or an investor in taking important trading and investing decisions. We hope you liked this short video and we look forward to see you soon. Thank you. This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.